Welcome to Vanijja. Today we are discussing one of the most critical security steps in international trade, the bank's checks before advising a documentary credit. Hello, and thank you for joining us on Vanijja. This video is designed for anyone new to trade finance, offering a step-by-step, methodical guide to bank procedures. In global trade, thousands of transactions happen daily, often involving promises of payment from banks. But how does a bank know the payment promise, the documentary credit, is actually legitimate and safe to process? The core problem is simple. A receiving bank must protect itself and its client from fraud, compliance risks, and flawed contracts before confirming a payment guarantee. This initial check is non-negotiable. In this video, we will break down the 4 essential checks a bank performs before advising a documentary credit. By the end, you will understand the critical safeguards banks use to manage risk in trade finance. We will cover 4 main areas. First, how banks verify authenticity. Second, checking the credit limit. Third, ensuring regulatory compliance. And finally, reviewing the document's content for practicality. To start, let's establish what we are discussing. A documentary credit, often shortened to LC, is a trade finance mechanism. Simply put, a documentary credit is a guarantee from a bank that a seller will receive payment, provided they deliver specific documents proving the goods have been shipped as agreed. It acts as a trusted intermediary in international transactions. The advising bank's role is to securely pass this payment guarantee from the buyer's bank to the seller. But before they advise it, or pass it on, they must perform crucial security checks to confirm safety and validity. Our first crucial tip is verifying the receipt and authenticity of the credit. This is the initial security check to prevent fraud. The bank must confirm that the documentary credit genuinely comes from the stated issuing bank and that its terms have not been altered in transit. This ensures the document they are processing is the correct, official payment guarantee. If the documentary credit is sent via telex or a physical letter, authentication relies on examining signatures against specimens held on file or verifying the agreed testing algorithm that appears on the telex. For modern documentary credits, usually sent via Swift MT700 message, authentication is determined by checking the message's apparent authenticity, which signifies the bank has checked its internal protocols as required under UCP 600. Moving on, our second tip involves a crucial financial review, checking the documentary credit against an existing credit facility. A credit facility is essentially a pre-approved, formal agreement defining the maximum financial risk a bank is willing to take with another bank. It sets limits on the amount and type of exposure. If the bank is asked to act as the nominating bank, meaning they might incur a payment obligation, they must ensure the LC's value and terms fit within the pre-agreed limits of the credit facility with the issuing bank. If the terms are outside these limits, the advising bank should inform the issuing bank before advising the LC to avoid misleading the seller. The third tip is mandatory for all banks, reviewing the documentary credit against internal bank policy and external regulatory requirements. This step includes vital sanction screening. The bank must check all involved parties, entities, and countries named in the LC against applicable sanction regulations to ensure they are not facilitating illegal transactions. The bank also adheres to its own policy regarding the nature of the transaction. For example, if the goods description is vaguely listed as equipment, the bank policy might require seeking a more detailed description to understand exactly what is being shipped. Our final tip, Tip 4, addresses reviewing the actual content of the documentary credit for workability. This is about making sure the LC is practical for the seller. Workability refers to whether the beneficiary, the seller, can actually fulfill all the conditions and produce the required documents listed in the credit. A highly detailed or conflicting LC might be deemed unworkable. Banks often review key details like the expiry date, the latest shipment date, the goods description, and the type of transport document required. If a conflict or need for clarification exists, some banks will contact the issuing bank before advising the LC. Now that we have covered the 4 tips, let's connect these ideas with a practical, real-world scenario. Imagine a documentary credit arrives, specifying the shipment of electronic components to a country currently under international sanctions. This LC also requests deferred payment, meaning the advising bank would take on the risk if they confirm. Tip 3. Policy and compliance immediately flags the sanctioned country. Tip 2. Credit facility highlights the risk of deferred payment and checks the issuing bank's limit. The bank will stop advising the LC and inform the issuing bank because it violates both regulatory rules and poses a financial risk. To summarize, the bank's 4 crucial pre-advice checks are verifying authenticity, checking against the credit facility limits, ensuring regulatory compliance, and confirming the document's workability. These steps safeguard the transaction for everyone involved. We hope this methodical breakdown was helpful for your understanding of trade finance security. If you have any questions about documentary credits, please leave a comment below. Thank you for watching, and be sure to subscribe to Vanijja for more direct educational content.